I'm going to show you how to turn financial forecasting from prompt by prompt execution into a fully automated system using Claude. Because right now, every time new data comes in, you need to repeat the same process. Open the PDF, find the numbers, update the model, and then fix what broke, and then repeat the process every single time new data comes in. Now it works, but it's still very manual, and more importantly, it's not very consistent. The logic lives in your prompts and not in the system, which means every run is slightly different and requires a lot of verification. So in this video, I'll show you how to build a pipeline where raw financial data flows into a structured forecasting model that updates itself automatically when new data arrives. This way, the logic is fixed and the structure is consistent so that the system handles execution without having to restart the process each and every time. I'm going to showcase this by executing a use case with real public company data because that's where this matters. It includes messy earnings releases, inconsistent labels, and different formats across quarters. If the system can handle that reliably, it can handle your internal reporting without breaking as well. Now, if you want the exact prompts, all the workflow files, and the data sets that I use, everything is available in the free community linked in the description below. Getting the source data. Before anything gets built, we need the raw data. For the data, as an example, I'll be using Amazon's quarterly earnings releases for this project because they are real financial reports with real complexity. These are the same documents that you as an analyst or an investor could use. So full income statements, cash flow statements, balance sheets, segment breakdowns across AWS, North America, and international. They have inconsistent table layouts. They have mixed labels across quarters. They have narrative sections sitting between the numbers and different terminology for the same line items depending on when the report was published. Now, Amazon is the example data set, but the workflow applies to any company. Now, let's get into the building. Building the forecasting model. I start inside my forecasting_automation folder. Inside, there are 4 folders and 2 instruction files. The input folder holds the Amazon PDFs that we just downloaded. The processed folder is where the per quarter Excel files will be saved after extraction. The model folder is where the final forecasting workbook goes, and the logs folder stores a record of every run, which files were processed, which periods were detected, and whether anything went wrong. Then there is one instruction file at this stage, which is workflow.md. This file contains the full pipeline logic that Claude will follow to build the model. It covers the entire process from extraction rules, standardization logic, to workbook structure and validation checks. Since the logic is already defined inside the file, I don't need to guide Claude step by step. One instruction runs the full process. Now later in the video, we will introduce a second file, which is automation.md, which handles updates. I open Claude Cowork, click work in a project, choose a different folder, navigate to the forecasting_automation directory, and then I click select. Now a permission pop-up appears and I click always allow, and then I press enter. At this point, Claude has access to the full project, including both instruction files. The instruction is one line. I type follow workflow.md strictly and execute the full pipeline end to end. As soon as I press enter, the progress panel starts updating. The system reads the folder structure, loads its PDF reading and Excel building tools, and begins processing all 8 earnings releases. For each report, it extracts revenue, costs, operating income, and net income from the income statement. It pulls operating cash flow, capex, and financing flows from the cash flow statement, and it captures balance sheet items and segment data for AWS, North America, and international. Every document is read in full, and the data is organized into a consistent structure, even though the source documents use different formatting across quarters. After extraction, each PDF becomes its own structured Excel file saved in the processed folder. Now I open the process folder and can see all 8 files created, 1 per quarter. I click into one of them and it has 3 layers. First, a raw extraction sheet with every line exactly as it appeared in the original document, preserving the source labels and page numbers for full traceability. Second is a structured data sheet where the financials are cleaned and mapped into consistent categories so that net sales, revenue, and total net sales all resolve to the same standardized revenue row. And third, a metadata sheet tracking the source file, extraction timestamp, and processing details. Now this means every number is traceable and it's consistent across quarters and it's ready to be used directly in the model. The period is identified from the content of each PDF, not from the file name. So whether the document says Q1 2025 or 3 months ended March 31st, 2025, the system standardizes it into the same format. And that consistency across every file is what makes the automation work later, because the update process expects the same structure every single time. Now, once all 8 quarterly files are created, the system combines them into a single forecasting workbook. And then I click View the Forecast Model, and it opens inside the preview. Then I click the Excel icon and click Allow to open it in Excel. Now, the historical model sheet shows 8 quarters of financial data with calculated fields for gross profit, operating income, margins, and free cash flow, all built with formulas, not hard-coded values. If revenue changes, every derived metric recalculates automatically. The driver sheet is where the logic of the forecast becomes visible. It contains the key assumptions that control the model: revenue growth rates, cost percentages relative to revenue, capital intensity, things like that. All derived from the historical patterns rather than arbitrary inputs. The forecast sheet projects future periods using formulas linked to both the historical data and the drivers. Revenue grows based on the growth assumption, costs scale as a percentage of revenue, and profitability flows through the model automatically. Change one driver and then the entire forecast recalculates. There are also scenario sheets for base, upside, and downside cases, a validation sheet, commentary, and sources sheets explaining the logic and citing the original documents. The system runs a verification pass at the end. In this case, all formulas recalculated with 0 errors, every cell is formula driven, and the model is internally consistent. At this point, we have a working forecasting model built entirely from raw earnings PDFs. But this is the only time we build manually. Everything after this is automated, and that is where the real value of this system shows up. Scheduling automatic updates. So now the model exists and the structure is locked in. The next step is making the system check for new data on its own and then to update the forecast whenever fresh PDFs arrive without rebuilding anything. I click on Schedule Tasks and then click on New Task. In the name field, I type Forecast Automation. In the description, I write Updating the forecast with the new PDF financial data. In the prompt field, I now put the update instruction that defines the automation logic. Now it tells Claude to scan the input folder for new PDFs to then compare against what has already been processed and only act on files that are new. For each new file, it extracts the data using the same structure as every existing processed file, the same sheet names, the same column order, and the same normalized labels. Then it creates a per quarter Excel file in the processed folder and appends the new period into the existing model. The rules in this automation file are strict and very specific. Do not change sheet names, do not change layout or overwrite formulas or replace formula cells with hard-coded values. Only append new data and let the existing formulas extend. Now these rules exist because in most manual update workflows, this is exactly where things begin to break. Someone may paste new numbers and then accidentally overwrite a formula, or someone inserts a column and that shifts the entire layout. So this instruction prevents all of that by defining exactly what the system can and cannot do. For the frequency, I choose hourly, which is the most aggressive option for demonstration purposes, but in practice, daily or weekly would work for most finance teams since earnings releases do not arrive every hour. I click more options and I select Claude Opus 4.6 as the model. I then choose the forecasting_automation folder as the working directory and then I click save. The schedule task is now active. Now what happens from this point is pretty simple. At the scheduled interval, the system enters the workspace, it compares the input folder against the process folder, and then determines whether anything new has been added. If nothing is new, it just exits immediately without touching the model. But if a new PDF is there, it runs the extraction, it creates the process file, and then it appends the new quarter into the model without changing anything. The model does not get rebuilt, it just gets updated. Now the one limitation is that the system still waits for the next scheduled interval, but there is a way to make this even more responsive, making it run continuously. Using Claude Code, you can run the update logic in a continuous loop from the terminal so that the system reacts as soon as new data appears rather than waiting for the next scheduled window. Now before this step, you need to have Claude Code installed and set up on your terminal. At this stage, I also create a second instruction file called automation.md inside the project folder. Now this file holds the same update logic I used in the schedule task earlier so that the terminal loop can follow it directly instead of pasting the full instruction every single time. Now I open my terminal inside the project folder, I type Claude, and then the interface appears immediately, confirming that the environment is all ready. Now the automation.md file is already in the working directory with the full update logic inside it. Then I run a simple loop in the terminal that executes the automation logic every 10 seconds. And I'll show you the exact command on the screen. And as soon as I hit enter, the terminal starts running. On the first pass, the loop checks the input folder and finds that all existing PDFs already have matching processed files. It lists what is there, confirms that there's nothing new, and then it exits cleanly. Now this is the correct behavior. Good automation knows when to do nothing. Now then, I minimize the terminal and I drop a new Amazon Quarterly PDF into the input folder. I do not reopen Claude, I do not explain the task again, I just add the file. On the next pass, the terminal detects the new PDF and identifies the reporting period from inside the document, and then it starts processing. Now in the terminal output, I can see it's creating a new Excel file in the process folder that is mapping the financial data into the same standardized categories as every other quarter, and then opening the existing forecast model to append the new period. Now the historical sheet has the additional quarter, the driver logic extends to incorporate the new data points, and the forecast recalculates through the existing formulas. Now the model absorbed the new data without any structural change. Now this is not the system acting on its own, it's the automation instruction that we defined earlier on running in a loop. I open the updated forecast model in Excel to confirm. The new quarter appears in the historical data, the calculated fields, gross profit, margins, free cash flow, they're all formula driven and they all match the previous quarters. The scenario sheets have updated because the historical averages shifted with the new data, so the base, upside, and downside projections now reflect a broader data set. The process folder has a new Excel file matching the same 3-layer structure as every other quarter, and the logs folder has a new entry recording exactly what happened, which file was processed, which period was identified, and whether the model update completed successfully. Check the new process file against the original PDF, make sure revenue and cost figures match, that segment data was captured correctly, and labels align with existing quarters. Then check the model to verify the new period flows through the drivers and forecast without breaking any formulas. This is where forecasting changes in practice. In a manual process, you notice the new filing. You open Claude, you explain the task, you wait for the output, and then you check whether the model survived. But here, the loop handles detection and execution all on its own. The structure never changes between runs. You're maintaining a system that keeps the forecast current instead of rebuilding it every quarter. So that is the full system. Raw earnings PDFs to a structured forecasting model. The update process scheduled to run automatically, and a continuous loop that reacts as soon as new filings arrive. Now the model just gets built once, and after that the system maintains it. So whether you add one new quarter or even a full year's worth of filings, the workflow stays the same. The structure stays fixed, and the outputs remain consistent. Now, if you want the prompts, the workflow files, and the data sets from this video, everything is in the free community, which is linked in the description below. And I'll see you next time.